So we want to bring it to as many countries as possible within the shortest period of time as possible with the right partners. Yep.
Thank you very much.
Thank you very much. Thank you, everybody.
Our next speaker is a passionate individual from Pakistan, Dr. Amjad Saqib, who brought an Islamic principle of philanthropy and converted into financial access for the massive as a tool for fighting poverty and generating sustainable livelihoods. To share his story, I humbly invite Dr. Amjad Saqib. Please welcome.
Bismillah ar-Rahman ar-Rahim. Many thanks, Islamic Development Bank, for providing me with this wonderful opportunity to speak to this distinguished gathering. Ladies and gentlemen, I represent Akhuwat, the largest interest-free microfinance program, currently serving more than 500,000 families. Yes, Akhuwat is a microfinance program. It provides small loans to poor people to start a business and come out of poverty. But it is much more than that. It is manifestation of hope and optimism. Akhuwat is solidarity with the poor, and it is an effort to help them realize their potential and come out of poverty. Akhuwat started its is a unique program, and I would in fact like to narrate you a story which will help me explain how the idea was materialized. The story dates back to 15 years. It is year 2001. At that point of time, I was working in a conventional microfinance, and we used to charge 20% or 30% interest on the micro lending. During that period, I realized that it is an extremely useful strategy for poverty alleviation, but I got to some extent uncomfortable with this microfinance, with this conventional microfinance on two accounts. Number one, obviously, we are Muslims, and the riba is forbidden, and it is like waging war against Allah Almighty. And the number two reason was that conventional microfinance, I think, is also against the principles of equity. If a rich person has to buy a Mercedes car, he goes to the bank and takes loan at a rate of 10%, 12%, or 15%. But in microfinance, a poor person has to take a loan for her livelihood at a rate of 30%, 40%, or even 70%. So it was in this context that I was contemplating and sitting in my office that suddenly there was a knock at the door, and entered a lady with tears in her eyes. She sat in front of me, and she told me that only a few days ago she lost her husband, and now there is nobody to take care of her 4 children. She said that I want to see my children successful in life. I want to see them realize their own dreams. And I don't want them to, steal and beg or fall victim to a crime. So I asked her that, how can I help you? She told me that she knows that I give loans on interest, but she surprisingly told me that she is here not to take a loan on interest. She also mentioned that she is not here to take any charity. So I was amazed that how can I help her? So when I asked her that how can I help you, she told me that there is a midway between charity and interest-based lending. And she told me that this midway is the Qarz-e-Hasan. And Qarz-e-Hasan, as we all know, is a loan without any financial motive, or a loan which is called a benevolent loan. So I was amazed by the story of the lady, and I was amazed to see her courage and her conviction and her, this promise with herself that neither she wants dole or charity, and nor she is interested in a loan which compromises his faith and ideology. So I gave her $100, a very, very small and paltry amount. She purchased 2 sewing machines with these $100, and then she started working hard. And next 6 months were amazing in terms of results. She not only sustained and nurtured her family with the income of these sewing machines, but she was also able to marry one of her daughters. And exactly after 6 months, she again came to my office. There was a knock, and she entered, sat in front of me. But this time there were no tears in her eyes, and she told me that, look, I'm here. You might have thought that I will not come, but I'm here. And then she pulled out $100 out of her wallet and gave it to me. So that was very inspiring for me. But one sentence which she uttered was even more inspiring. She told me that now I am returning you this $100, but don't put these $100 back in your pocket. Give these $100 to somebody else. I'm sure that this money has the potential to change the life of many poor people like me. So, ladies and gentlemen, that was a very, very defining moment in my life. And as a result of that message, and as a result of that moment, an organization was born, and this organization is the, this Akhuwat, which I'm now talking about. Akhuwat is an Arabic word which means brotherhood or solidarity with the poor. And in fact, the story of Akhuwat goes back to 1400 years ago, when Holy Prophet, peace be upon him, migrated from Makkah and came to Medina. So along with came many companions of him, and just because of this journey, all of them got poor. So Holy Prophet established a bond of relationship, a bond of love, compassion between these two kinds of people, the people coming from Makkah and the people of the Medina, and that is called, Muakhat Medina. And our organization is just a continuation of that, great and glorious tradition of the Holy Prophet. So Akhuwat, with the passage of time, developed 5 principles. The principle number 1 is that the revolving fund which we have created is utilized to give loans which are completely interest-free. Number 2, the second principle is that all this social and financial intermediation takes place in the mosque or in the church, because we have found that the indigenous institutions, result in extremely transparent and participative mode of actions. The third principle is that the organization is combination of necessary compensation and volunteerism. Besides 3,000 active borrowers, besides 3,000 employees, we have more than 20,000 supporters and volunteers who render their services free of cost. The fourth principle is that we convert our borrowers into our donors. Whenever we give loan to somebody, we give this loan with a message. We tell them that, look, somebody has supported you. Somebody has given you this loan. Share out of benevolence, love, and compassion. And you are not being charged for this loan. So now this is your responsibility, that once you come out of poverty, then you should also be willing to help somebody else. And you will be surprised to know that 70% of our borrowers, the poor borrowers who took loans from us, they have now become our donors. The fifth principle is absolute non-discrimination. We derive inspiration from Islamic spirit of brotherhood, but our message is for the whole humanity and for the whole mankind. And we The organization was established in 2001, as I told you the story. Initial few years were very difficult, but we have now come across fairly, great destinations. And this is now the largest interest-free organization in the world. There are 500,000 active borrowers. There are 1.4 million families which we have served so far, and more than 250 million US dollar has been dispersed. The organization, which started by just $100, now it has reached 250 million US dollars. The recovery percentage will also, bewilder you. It is more than 99.9%, with 500 branch offices in 350 cities of Pakistan. We are serving, the whole breadth and length of the nation. And as I mentioned, that 70% of our poor borrowers who were just, struggling with their life in the beginning, by dint of this, their hard work and this capital access, they have become now donors. So ladies and gentlemen, we haven't done anything new. Let me explain it, that what we have done is just institutionalization of the individual practice of Qarz-e-Hasan. The Qarz-e-Hasan which I give to my brother, you give to your brother, or we give to our friends. We have just find a mechanism to create a fund, a revolving fund, which is being contributed by well-to-do, and then institutionalization of the whole process. So what are the lessons or the conclusions for people like you? There are three major lessons which we have learned with the passage of time. Number one is that there is no dearth of people who are willing to share their resources, who are willing to establish the bond of solidarity, love, and compassion with the have-nots. And number two is that poor are credit-worthy, poor are bank-worthy, poor are trustworthy. If we are willing to trust them, they are also willing to reciprocate with 99% recovery percentage and 70% of them also becoming donors. So the people who are the takers of money have been converted into givers of the money. So this is a manifestation of the strength and the success of the idea of sharing and Qarz-e-Hasan and Muakhat. So let me conclude that the basic thing is poverty alleviation. But I think we should also concentrate on the means and at the ends, both at the same time. We cannot leave the poor people at the mercy of market economy or capitalism. We cannot overburden the poor people with 30%, 40%, or even 70% of service charges. We need to build a system of mutual support and economy of sharing. 99% of world's wealth is concentrated in only hands of only 1%. So this demonstrates that there is something which is missing, and we all have to address that something which is missing. Islamic finance, like all other financial systems, believes in creation of wealth, but it also believes in distribution and sharing. Poverty, we all know, is a pain, and poverty is a poison. But without compassion, poverty cannot be eliminated. I'm here to remind you and to remind myself that the day is not very far away when I will be asked by my Creator that if your neighbor was thirsty, why was it so? If your neighbor was hungry, why was it so? So we have all to prepare ourselves for that day. And that's the reason, that's the motivation, that's the inspiration. And let's help those who need our help. Let's help those who can stand on their own feet, but they're not unable to do that because of poor financial access. This is what Akhuwat stands for. This is what the humanity stands for, and this is what we all stand for. So I conclude my story over here. Thank you very much.
Thank you very much, Dr. Amjad. This is really an incredible story of people lending out their hands to support their brothers and using the financial means of an interest-free model. And we have seen it as showing remarkable results. One question that a lot of people have been asking is that, is this model sustainable in the long run? Can it be scaled at a national level? And will it continue to have the same 99.9% repayment that it has in your model?
Yeah, that's a very critical question and a very important one as well, the sustainability. You know, the whole program is based on two basic assumptions. Assumption number one is that there are people who are willing to donate. There are people who are willing to share. There are people who want to support the poor brethren. And the assumption number two is that the poor are not beggars. So if we do good thing, they will reciprocate. The evidence of the truthfulness of these two assumptions is that we started this program with $100 and we have reached $250 million US. So that means the people are willing to share, and every day our program is expanding and growing and more people are joining us. And the truthfulness of the second assumption, that the people are not beggars, that is manifested by the enviable recovery percentage of 99.9%. So if a society has both kinds of people, haves which are willing to share, and have-nots who are people with dignity, honor, and self-respect, so the program will grow. We cannot measure our program merely on the economic indicators or economic principles, because economics tells us self-interest and competition and market economy and the greed. But Ahovat's experience speaks of solidarity with the poor. It speaks of compassion. It speaks of giving, and it speaks of standing with somebody in time of need. So we cannot purely examine the Ahovat process on economic and financial terms. Where economics ends, I think the principles of compassion and solidarity start.
So indeed, we are seeing that the microfinance model of Akhuvat is not only based on the model of solidarity, but also on economic principles with the repayment rate that we are seeing. Where do you see it being, how do you see it being replicated in other countries out of Pakistan, and what role can organizations like IDB play?
Initially people thought that this model may not be replicated, but even in my country, in Pakistan, there are more than 26 organizations which have started similar programs. So as I told you, that there are basic two assumptions. Number one assumption, the people who are willing to share, and the number two assumption, the people who want to work hard, who want to realize their potential. So in any society, if these two types of people are available, the program like Akhuvat can be started. I see no reason why in such a wonderful country like Indonesia we cannot start this program. In fact, I will urge you and inspire the young leadership of this country to think about. And this is just bridging the gap between haves and have-nots. This is the responsibility of the haves to share their resources. And then those people who are have-nots, they also want to move ahead in their life. They also want to actualize their dreams. So we just need to intermediate. This financial and social intermediation will ultimately result in poverty alleviation, and we'll all be able to develop a society which offers opportunities to everybody. So I'm extremely confident and positive that the legacy dates back to the teachings of the Holy Prophet. This is our common legacy. So we just have to, find the right answers. We just need to have a vision and a passion to do something. The model is there, and the success, tells us that it can be replicated.
Thank you very much. Thank you very much, Dr. Amjad. This is one of the very inspiring journeys of not only human development, but humane development, where the principles of compassion are reaching out to the brotherhood. Our next speaker is another innovator and leader in this space, but a more modern one, so to say. So we have the youth representative, Ahmed Moore, to share his story about Liva and how he founded it and how he's taking his work forward with Liva. So please welcome Ahmed Moore. Forward and back.
Again, I'd like to thank the IDB for having me here. It's an enormous pleasure. And thank you all for giving me the opportunity to tell you about our work at LIWA. So as I mentioned this morning, I was a journalist for a time before starting the company. And the company really grew out of, alongside my co-founder, Samir Atiani. The company grew out of a first-hand experience of a lack of opportunity and what that means for not just young people, but people across all strata and age groups in society. So Samit and I started the company in 2013. Great. In 2013, when I was in graduate school at Harvard, and Samit was a senior software developer at a company called Etsy in Brooklyn. The basic challenge that we're working to address is a developmental one. There's a $240 billion SME funding gap in the Middle East region, mainly because of information availability. Banks don't lend to small businesses. They regard the sector as unduly risky. Our perspective is, in fact, that they have a poor grasp or an underdeveloped understanding of what the risks associated with small business lending are. So the way in which we work, we take a small business loan. To date, we've had about $600 million in demand expressed through our website in Jordan. Our maximum loan size is about $56,000. We've worked with 78 small businesses in Jordan to date in the past year, and our portfolio total stands at $1.7 million. When a small business needs a loan, goes ahead and applies through our website. Takes about 7 to 10 minutes. We assess the risk, conduct the credit assessment using some of the tools that banks use, so cash flow analysis, but we also have something called a shadow underwriting process. It's a machine learning algorithm, basically a statistical model that correlates different borrower variables with credit outcomes. We make an assessment of the risk, we price the murabaha loan, and then we host it on our website, where individuals like yourselves, so retail lenders or investors, can now invest in the loan, or banks and other financial institutions can invest in the loan. So to date, we have about 1,300 registered retail lenders and 3 banks that we also work with. That actually needs to be updated. 78 loans, 1.7 million in loans underwritten. So the growth has been substantial, and it's happened quite quickly. Again, we've had $600 million in demand expressed in the past year, but we've only been able to service $1.7 million of that. And the challenge comes down to supply. Consistently, the challenge is supply. And then we're addressing the supply issue through more retail work lately. So when we think about what it is that we do, yes, we're a lending company, but I think where we drive most value is on the credit assessment, so the red the red segment there. Basically, access to credit in our part of the world is not a question of the availability of capital. It's really a question of building an effective distribution channel into market segments where that capital should be best deployed. And so the way we frame the challenge is one of information availability, not capital availability. How do you take certain things that you know about somebody, validated information, and then render that information into some model that assesses their creditability? That's how you, so the way in which you can answer that question is how you begin to penetrate markets like Egypt and other markets where credit bureaus don't exist, or to the extent that they do exist, they have uneven coverage. Although I would say, unfortunately, in the Middle East, and I suspect in other places, possibly Indonesia. So today we're competing on customer service and on process innovation. Those two aren't very sexy ideas, but when you come to the Middle East, you'll see that customer service in particular is not valued in the way that it ought to be. And so that alone makes a very compelling business proposition, I think. So product and technology. Our business is comprised of lots of different things, but very, very basically, we're working to build an online bank. And the market segment that we're interested in is the small business, which has anywhere from 4 to 15 employees, has been in business, so the average small business in our portfolio has been around for 5 years. And they're capital constrained. They're ready to grow, they know how to grow, but they don't have access to the capital. I don't need to talk about the legal structure, but that's it. That's our business. We're eager to grow. We're eager to come to Indonesia eventually. I think Malaysia is also a very compelling opportunity for us as well. But that's the summary. Thanks.
Thank you, Ahmed, for introducing us to Liva. Some of the key questions coming from the social media feed regarding Liva is that what kind of businesses do you support, and specifically, how can Liva be used to support startups?
Great. So both great questions. Right now, we're a very niche-focused company. We're focused on working capital. The vast majority of the small businesses that we work with are importing goods to resell, or they're wholesalers who are selling to retail clients in Jordan. At this stage, we don't have a startup product in place, and the main reason is risk. I do think that you can take a sensible approach to minimizing risk for startups. We don't have that capacity yet. We'd like to have it in the future, but right now we're just very, very focused on underwriting a high-quality trade finance product.
In knowing that what kind of opportunities it offers, Liva as a platform offers to small investors and lenders. Can you speak to that a little bit?
Absolutely. So whenever I speak about the investment side of the network, so I'm passionate, our mission is job and income growth in the markets that we serve. And I neglect to mention that the income growth means both borrowers and the lenders who are lending the money. The first thing I should say is that it's a risky product. As a lender, as an investor, this is not a deposit. This is not a savings product. This is something that you allocate maybe 5% of your portfolio to, or maybe less even. So if you're looking at a universe of investments, you have bonds, and then at the very risky end, you have stocks. We're closer to stocks, I'd say. However, on a risk-adjusted basis, you get, depending on whom you lend money to, anywhere between I'd say 7 to 9% profit. So murabaha contracts, right? You help somebody buy something and then they resell it and you gain a portion of the profit. On net of fees, actually. But it is a risky product. This is not a savings product.
Another area which we might want to explore with concepts like Liva is that there is a growing space and competition in this space to bring such financial services. So how do the audience, if they're interested in launching such platforms, what is the business model? How do they make money?
Absolutely. First of all, regulatory risk is something that we haven't talked about a lot today. I think it's critical with any one of these businesses that you align yourself with the regulator. If you're operating in financial services or in healthcare, regulations exist for a reason. So be in contact, I guess, with the regulator if you're going to try to start a business like this. More competition is great. In the Middle East, it's $240 billion gap. Globally, it's $1 trillion gap. I think more market entrants can just make kind of a better environment for everybody, or help produce a better environment for everybody. But learn the risk management stuff, and then the regulatory stuff is critical.
Thank you very much, Ahmed, for a very thoughtful presentation. So audience, our next session is going to be an engaging masterclass in which some of our lead participants introduce concepts of financial inclusion, some of the challenges being faced in Indonesia, and guide you through some potential solutions. So we'll just need a 5-minute break to set up the room. So we will appreciate if you can be in the room with us for the next 5 minutes, or just stretch yourself so we can start the next session on time. Thank you very much.
Imagine a world where 201 million people currently unemployed have access to the needed finance to get something started. Start a business, a startup, a source of earning, or simply access to reliable financial services for banking, credit, a checking and savings account. These words remain complex and out of reach for most people. Youth unemployment remains a global concern. Only 62% of the world's adult population have a bank account, leaving 2 billion adults with no banking services at all. By contrast, only 35% of youth have a bank account. Financial inclusion is not just about having access to a bank account. What really matters is whether people actually use financial services towards productive activities such as a secure savings, making investments from their surplus earnings, or getting credit to grow a business. In Southeast Asia, for example, only 35% of enterprises have a line of credit or loan from a financial institution. In recent times, there has been a significant growth in financial inclusion. Innovations in financial services can tap enormous resources and money for people who need them the most by blending traditional and innovative ideas. The advent of mobile phones and growth of digital platforms have given financial access and coverage to many more individuals. In fact, digital innovation has helped increase financial inclusion by more than 90%. The Islamic Development Bank Group, a multilateral development institution based in Jeddah, Saudi Arabia, with operations in over 150 countries over the world, is interested in looking at ways to reduce such inequalities and promote financial innovation inspired by the principles of Islamic finance. The IDB is organizing a seminar to explore innovative solutions for financial inclusion of the youth. This seminar will bring together influential thinkers, policymakers, and entrepreneurs to share experiences and address the role of emerging technologies in financial inclusion. The seminar will include a panel discussion, showcase of successful financial innovation, and masterclass series, and much more. Be sure to catch us at the Jakarta Convention Center on the 16th of May, 2016 for this exciting event.
Bismillah ar-Rahman ar-Rahim. We are about to begin our third session, the masterclass. The masterclass concept is basically to design a class concepts of problem solving on particularly with the issue of youth development and innovations in financial inclusion. This will be a very exciting session, so I hope you're ready, you're energized to work through the problems. We'll present you a case study which is very pertinent to Indonesia and to help you guide through to come up with innovative solutions, and these solutions we are going to take back with us to IDB, and hopefully we are going to use this in our future programming. This is an opportunity for the youth over here to present their ideas, to share their knowledge, and to work with us IDB. We are very thankful that to have our masterclass presenters, Muhammad Chaudhry and Jeffrey Kusnadi. Both of these gentlemen are exceptional at what they do, and what they do is they provide technological solutions for various business needs. Muhammad is the technology media lead at PwC for East Asia region, and Jeffrey Kusnadi is the senior risk assurance manager with an expertise in cybersecurity, in risk assurance, and other internet and financial services technologies. So I welcome Muhammad and Jeffrey to take over to present this case and to work on an engaging session with you on financial inclusion. Please.
Good afternoon, and thank you, everybody. I hope you've all had a good lunch break earlier on, and you've sat through a few very interesting and engaging presentations in the last hour or an hour and a half. So what we'd like to do now is take you through a little bit of an exercise, which, as Asim mentioned, is what we're calling a masterclass. And in fact, the exercise will be your exercise, not ours. And so it'll be an opportunity for us to do a little bit of work in groups amongst ourselves as well. So I hope you're ready for a little journey over the next hour and 15 minutes or so. So just if we're able to get the slides to the next slide, then I can start explaining to you what this is all about. So we've already been introduced. My name is Muhammad, and my colleague who will be working with me together on this session is Jeffrey. Maybe if we can go to the next slide. For those of you who may not know, PwC is the world's largest professional services firm. We have around 200,000 people around the world. And we operate in most countries of the world. What's relevant for this session is that we do have a lot of people who work in areas around financial inclusion, technology, telecommunications, and the relevant areas that are pertinent to the discussions we're having today. Go to the next slide. And the next one. And so to this afternoon's agenda. So what we would like to do, if I may introduce it, is